Welcome to the Political Risk Podcast, where geopolitical risk and insurance markets meet. You're listening to a special episode produced in association with Lockton Re. Our theme is Beyond the Blast, capital management of tomorrow's terror threats, and I'm your host, David Benyon. Our topic comes from the title of a landmark report that was published by Lockton Re together with Blackthorn late last year. And to go through it, I'm pleased to say that we have three of the report's authors. Paul Upton is Chairman of Specialty at Lockton Re, Niki Whitley is Director of Advisory at Blackthorn, and George Wragg is Senior Catastrophe Modeller at Lockton Re. Our conversation follows a similar structure to the report itself, in three parts. Paul, who wrote the executive summary of the report, provides an introduction. Niki will then lead us through the chapter that she authored on the threat landscape, including a scenario that involves the use of drones in the hands of terrorists. And that will then segue into discussing the risk modelling challenges, which is George's area of expertise and the other chapter of the report. And I'll include a link to the paper itself in the blurb to this episode. It's an important paper, I think, because it asks some profound questions of the insurance and reinsurance sector in terms of how it could adapt with greater agility alongside the shifting terrorism risk landscape. That includes reviewing the realistic disaster scenarios that the market runs to feature new terror tactics and technologies. And it means updating old data and assumptions about blast zone radii and probable maximum loss, all with the goal of increasing capital efficiency in the risk transfer chain between the shifting threats faced by insurance policyholders and the cost, relevance, and ultimately the value of reinsurance. Right, let's get into it.
Let's go around the table and introduce themselves, because I'm not used to always having three guests on at the same time.
My name's Paul Upton. I'm the Chairman of Specialty at Lockton Re. Been in the specialty reinsurance market for many, many years, both as an underwriter and a broker. And I was the sponsor of this particular paper, so looking forward to talking a little bit more about it.
My name's George Wragg. I've been part of Lockton for 2 years now, working as a cat modeller. And before that, I have 4 years experience as a cat modeller as well, mainly working with geospatial analytics, view of risk, data enrichment, etc., which kind of had a segue into the non-nat cat space.
I'm Niki Whitley. I work for Blackthorn, who are a malicious risks advisor. I'm a director in the advisory part of the business. We also have an insurance broking part of the business as well. I've worked in the malicious risks advisory or security risk management space for a number of years, and also I've got an intelligence background as well in the police and counter-terrorism.
Amazing. A lot of talent in the room and experience. Right, well, let's get to it then. So, Paul, you wrote the preface to the report, the introduction, didn't you? So no better place to start. Your forward makes the point that despite some exceptional loss activity, and obviously clearly we live in interesting times, a volatile risk environment, actually terrorism and political violence has delivered decades of continuous profit. So how would you explain that paradox?
Yeah, it's not that difficult to explain, I don't think. One, I think there's been a lack of significant losses. And we're talking about very, very large losses, the type of 9/11 event that really hasn't reoccurred since, thankfully. But also I'd point to some pretty smart underwriting, actually. The insurance market has got some pretty senior and long-term underwriters in their seats. And without being in any shape or form a cartel, they controlled the market reasonably well over that period of time and imposed disciplines on the market despite some really quite big economic pressures on them. And on the other side of the coin, there is very aggressive marketing going on from the insurance brokers who have ferreted away over the past decades to really bring to the table top-line growth. And when we think about terror in the insurance respect, we've got to think about the balance of premium and exposures, because exposures are just so large. So keeping that top line going has been an important part of maintaining the balance and allowing the market to thrive. But I think there's some smaller parts to that as well. There's more granular issues, I think, that we need to be considering here. And I think sort of on the insurance side, there had been periods when there's been price inadequacy, where the rates have been really truly low. And probably in terms of the evolution of the marketplace, that really hasn't matched that. So there's been a big miss factor. The market was still evolving at the point in time when inadequacy was there. And we've had some benign loss periods during that, thankfully, as well, to maintain some of the balance. But in the last 5 years, that's all changed around, and we've seen significant changes in the pricing. And I think the current market feel that there's somewhere between 125 and 150% sort of price adequacy in the insurance market. So that creates the balance, but that is under pressure. And we know that we've seen quite big rate reductions going on in the marketplace as the market has woken up to the fact that actually they survived Ukraine pretty well, and they've survived what has been going on in the Middle East pretty well. And the SRCC losses that could have come out from places like BLM and Chile have been very spotty. They've affected small pockets of underwriters.
And all those
rather than across
elections
the board.
last year, and
Yeah, all of that, which, people were really quite concerned about what might happen next.
well, trying to predict black swans turns out to be a bit of a fool's errand.
Well, I think, if you could do that, we wouldn't be here, would we? And I think also sort of the nature of the losses as they've occurred, the large losses that we have seen, Westfield, Ukraine to a certain extent, Chile, and even New Caledonia last year, have affected, say, small pockets of writers rather than across the board. And I think when we think about New Caledonia as well, it's interesting to see that as an SRCC type loss, that affected more the property market than it did the terror market per se. And there again is a sort of telltale sign of where we're very much spread outside of perhaps what you might call pockets of expertise.
Yeah, I can't be the only one who had to look up whether that was in the Caribbean or the Pacific at the time. But yeah, we all learned about it quite rapidly after it took place.
So, the market is in not a bad place, but there's a lot changing. And I think the paper that we're putting out and we've put together is sort of shining a light on those areas that I think we need to be truly careful of as we start moving through. And I think on the other side of the coin, when we think about reinsurance, the reinsurance market, the exposure is definitely all about tail. It's about catastrophic loss, catastrophic exposure. And one of the things that the reinsurers, I think, have benefited from is actually the insurance market overbuying reinsurance, because their modelling isn't really dealing with and coping with the exposures and the true effect of PML. If we could be better informed, we might be able to think about reinsurance in a slightly different way. And I think we're going to need to do that as we move forward into new challenges. And as we say in this, and Niki will talk about this eloquently, I'm sure, the new threat landscapes, that's something which we need to be super careful of.
I'm looking at a very finely printed copy of the report, but I'm going to quote just brief section from your forward, because I think it sums up a challenge about conservatism and growth in the market. So you wrote that without a more enlightened treatment of event exposure, our conservative view will prevent penetration, pressure prices, and threaten margins. So in broad terms, before we interrogate this in detail, how do you suggest we meet that challenge, and what kind of change should brokers and carriers push for?
To my mind, it's all about taking a bigger slug of the economic loss. And I think that's true of many different classes of business, not just terror. So I think that it's an important thing that we focus on. Where is the demand for insurance, and how can we satisfy that, and how do we support that moving forwards? So we sort of think about the market or the line of business in two ways. We think about terrorism, and by that I mean sabotage and terrorism, distinct and separate from PV, SRCC and other risk types, is very much the driver of the way that people think about their capacities. And it's where the modelers have been thinking about how they PML the positions and work out what the true catastrophe could look like. But we've got an issue there because it's not coping with some of the demands that we need to be focusing on. And, we think that perhaps they're over-purchasing reinsurance. This is something where people are sort of overreacting to what may be happening. And this is, coming back to George's part of the paper as to how can we interrogate that more accurately, more distinctly. And that's a big part of where we need to be going. And then the second part, again, is the changing threat landscape. We've talked about massive losses like 9/11, and we model on a similar basis. Is that pertinent moving onwards? What are the new threats coming through, and how should we look after those? So in answer to your question, to cope with that point about S&T, we do need to PML smarter. We need to be thinking about how we look at those exposures and set our modelling objectives, and how do we ultimately end up with a more granular and better defined outcome as far as that's concerned. And then I think for the second part, when we think about these other products and where are we heading to, the insurers, as I've mentioned, are very good at developing new products and very good at keeping the momentum on the top line. And they're now looking at where the demand lay. They're looking at BI, they're looking at threat, they're looking at loss of attraction, and they're looking at liability. And that's going to set some new loss patterns. And if we're not aware of how those loss patterns are going to behave, then there could be a lot of upset in the insurance market, because at the moment, with the formulaic retention setting in the reinsurance markets, programs are probably sitting above where the real action is happening. And I think to concentrate a little bit more on the shorter return periods is where we need to be when we're thinking about the new threat landscape.
Perfect segue to talk about the new threat landscape then. So, Niki, it's your turn to give us that view. So, agile thinking is a phrase that comes up in the report. There's an implication that the threat landscape is reasonably well understood, but the industry is still quite hampered by its weak approach to data. So, I guess the question then is how confident should reinsurers be about their understanding of the threat picture? And as you see it, what are some of the big misunderstandings?
Those are great questions. I think from a security or malicious risks advisory perspective, yes, I'd say the industry has, a good grasp of the broad contours of the threat landscape, but there's often a gap between understanding the threat itself and then translating that into accurate exposure or portfolio implications. So just to break that down a little bit, on the threat side, I think the fundamentals are reasonably well understood. We know what's driving hostile actors. We know how technology is evolving. We can track shifts in methodology over time. In other words, the picture isn't mysterious from that perspective. But the piece that weakens the confidence a little bit, and the report, I think, really highlights this well, is how those insights are then operationalized. The industry is still relying quite heavily on relatively blunt data inputs. So, for example, many organizations still default to quite static geocoding, to worst case bomb scenario assumptions. And those no longer reflect how attacks actually are unfolding today. So the risk isn't so much that insurers or reinsurers misunderstand the threat itself, it's that they can sometimes misunderstand how specific the manifestations of those threats can be. And by that, I mean, a modern attack is far less likely to now be a single large explosion in a city centre and far more likely to be, exploiting vulnerabilities in infrastructure, in building design, supply chains, and crowd dynamics. And if you don't have the exposure data to map those vulnerabilities accurately, it can become hard to turn the threat insight into meaningful risk insight. And in relation to misconceptions, one that we often encounter is a belief that we're just facing a slightly updated version of the early 2000s threat environment. So essentially the same actors, but slightly better tools. And that's very much not the case. What we're seeing now is a much more fragmented, more agile, as you said, less predictable space. And what that's done is it's actually technology, particularly to drones, digital reconnaissance, AI-enabled planning. Those things have fundamentally lowered the barrier of entry for sophisticated attacks. And that's a shift that doesn't always show up in traditional modelling frameworks. So to just wrap that up, yes, I think reinsurers can be confident in their understanding of the big picture. But at the same time, they need to be cautious about assuming that high-level threat awareness automatically leads to accurate modelling. The threat is dynamic. So unless the underlying data and assumptions keep pace with that confidence can very easily lead to some blind spots.
Niki, in the report, you outlined 5 core drivers that are reshaping the threat environment. So I will link to the report when I put this episode out, but would you mind just listing them in brief here so that we can go into them a bit more? And within those, which one do you think is shifting fastest? Or maybe conversely, which one do you think is least reflected in current assumptions?
Yeah, absolutely. So the report sets out 5 main drivers, and together these explain why the modern threat environment feels so fluid and so difficult to benchmark, I guess. So the first is strategic geopolitical competition, and that's increasing the use of hybrid tactics by states, and then also a blurring of lines between state and non-state actors. And what that means from a security standpoint is that we're seeing far more proxy activity, more covert support, more tactical experimentation. The second driver is social and political polarization. That isn't just a background factor anymore. It's creating fertile conditions for mobilization, for unrest, for lone acts of violence that we hadn't seen as much in the past, and especially around things like elections or moments of social stress in a location. The third is the technology curve. So drones, commercial platforms, 3D printing, AI, they've all created essentially an attack toolkit that evolves faster than regulatory systems can keep up with. And that's fundamentally changing what a credible attack scenario would look like. The fourth driver is climate stress. So not climate risk in the catastrophe modelling sense, but climate is a multiplier of instability. So things like displacement, resource pressure, and governance stress, those all feed directly into political unrest and agitation. And then the fifth driver is a convergence of risk categories. So terrorism, political violence, cyber operations, these used to be very distinct perils in distinct silos, but they now overlap a lot and they interact in ways that really can complicate attribution, escalation, and also the impact that we see.
Well, yeah, so I asked you about 3 questions at once there. I know.
You did.
Also, I love how broad those are when you explain them all, and I assume in no particular order there. A few years ago, when I was initially just starting to do this podcast, a few people were like, "Oh, it's quite narrow subject matter." I think what you just said outlined quite how broad these things are, everything from climate to drones and tech. So, which one's shifting fastest of those?
Yeah, sure. So I think technology wins by some distance, really. New tools, new tactics, new distribution channels, those are all emerging continuously. And hostile actors are very quick to adopt them or to utilize them in ways that meet, their objectives.
The third part of that monster question was, which one do you think is least reflected in current reinsurance assumptions?
That would be the convergence piece. So from a threat behavior perspective, events rarely fit into a tidy box anymore. A protest can turn into sabotage, a cyber intrusion can support a more physical attack, or a proxy group can operate under a criminal veneer. But I think many coverage assumptions still treat these as wholly distinct perils, as I said before, and that's where the industry really needs to catch up on that.
The industry loves
piece.
a silo in terms of its lines of business, the way it thinks, yeah. Although there are plenty of add-ons that mean that...
For sure.
Yeah. The report stresses the point that volatility is now the defining feature in the operating context, and that assuming consistency is in itself risky. So faced by that, I'm interested in what agile thinking actually looks like. What kind of indicators should act as triggers for reinsurers to assess and then reassess, I guess, if they've got to be agile, their view of risk?
So again, from a security risk standpoint, agility really means building an operating model that assumes volatility rather than being surprised by it. And that's very much the key message of the report, that static assumptions are now inherently risky. So to break down what that means in practice, the first part of agile thinking is adopting a structured horizon scanning approach. As security professionals, we work with indicators of change. So essentially those early signs that a threat actor's capability or their intent is evolving in some way. For reinsurers, the equivalent is identifying a small set of meaningful triggers. So for example, the first credible use of a new attack technology, a measurable uptick in proxy activity, or sharper patterns of mobilization. And once those triggers are observed, they should automatically prompt a reassessment of exposure at that time, rather than becoming, an item to look at in a broader annual review, for example. The second factor of agility is diversifying the types of scenarios that you use. So traditional deterministic scenarios, like the classic single blast fixed radius model, assume a level of predictability that the current environment just doesn't have. Modern threat scenarios need to incorporate movement, timing, multiple points of impact, system interdependencies. And that's how now real attackers behave, and it's what those modern security teams are training against. And then thirdly, agility depends on data. So if the underlying exposure data is coarse, even more sophisticated threat analysis can become diluted from that. So things like better geocoding, better building level information, better visibility of business interruption pathways, they all allow reinsurers to adjust quickly when a new threat emerges, to have that agile ability to switch direction.
Geocoding's got to be like the most basic. Is that static data?
Yeah.
In another life, when I've done sort of information warfare stuff for the Navy, you've got static data and you've got dynamic data. You can look at the type of ship, it's not going to change. But looking at the freeboard, is it laden? Is it in ballast? The actual risk for that vessel will determine massively whether it's just a few meters above the water to the deck or it's 10 if you're going to try and board it, if you're a pirate or a hijacker or something. So yeah, the static risks and then risks that change dynamically.
But I don't think we're even talking about something as sophisticated as that. We're looking at plugging holes. We're looking at mending some of the fences that we have with our data. Just getting the data and the location right. But George will talk about this.
Well, George, you've been very patient, but we will get to the modelling side of things very soon. Niki, did you have anything else to add on that point?
Yeah, I think just the final point on the agility sense is agile thinking is cultural as well. It's the recognition that a shift in threat capability, even if it hasn't yet translated into an attack, is itself a material sign. Security teams act on those signals. They don't wait for something catastrophic to happen. They're really acting on that recognition of a change. And, the insurance ecosystem will benefit when it adopts that same reflex.
So the report includes an example of an RDS, a realistic disaster scenario, involving coordinated explosive carrying drones. And you've already alluded to that as one example of the fast moving tech. So could you just walk listeners through that scenario and perhaps explain what makes it fundamentally different from the scenarios that the market is used to?
The drone scenario in the report is a really important illustration of how modern attack methodologies break that mold of traditional modelling. What it pictures is a coordinated set of small drones, each carrying an explosive payload, targeting several weak points across either a single asset or maybe across multiple assets in close proximity. Think of things like cooling systems, transformers, fuel stores, or even large crowds. Basically points where a relatively small device could have a really disproportionate impact. And then again, from a threat behaviour perspective, that is entirely plausible. We've already seen drones used in conflict zones like Ukraine in exactly those kinds of ways, and the technology is commercially available. And what makes it so different from the legacy stress tests is that there's no single blast centre. So the whole 250-metre radius concept essentially falls away. Instead of one detonation and predictable damage rings, you've got multiple precise impacts, possibly at slightly different moments, that are designed to create a kind of cascading effect. And that concept is much closer to how sophisticated attackers are now actually thinking. It's not how do we create the biggest explosion, but how do we create the biggest disruption? And disruption comes from hitting those critical nodes rather than, the obvious structural wall kind of scenario. And then another key distinction is that a scenario like this activates multiple parts of exposure. So you can have maybe relatively modest physical damage, but then outsized business interruption or secondary impacts on digital infrastructure or crowd-related liabilities. So in security terms, drones let an attacker turn what could have been just a small payload into a really complex event. And then I think the final thing is attribution challenge is real in this kind of scenario. So a drone incident could look like mischief, like terrorism, like sabotage, organised crime, or state proxy at work. And that ambiguity is precisely what many of the hostile actors that we're talking about go to exploit. And that can obviously create a real uncertainty for insurers and reinsurers who are trying to interpret, that policy language for each one of those perils. And I think it's important to say, this scenario, as I touched on, it's not speculative. It's an example of the threat environment and how that has already moved, and so where that risk modelling needs to follow.
Yeah, George.
Yeah, well, Niki stole my thunder in there.
Sorry, Josh.
No. But yeah, I mean, I guess from a modelling point of view, a lot of the modelling companies have done quite a good job of sort of analysing what a conventional bomb scenario looks like. I guess from what Paul was saying, there hasn't been many big, large tail losses recently. So maybe the pressure or the focus on these modelling companies to do that is maybe lower than some of the other nat cat perils, which is what they're focused on. But I think it's definitely, just because it hasn't happened yet, doesn't mean it's not going to happen, especially with all of these new technologies coming in. But I think the scenario that you've come up with is normally we're looking at 100% bomb scenario or a deterministic bomb scenario that happens in one place. Yeah. I feel with these technologies, that assumption may not be correct now. So we're already missing.
Yeah, I mean, that's what I wanted to ask you essentially, because the assumption that you're going to have 100% PMLs within that fixed radius, Niki already alluded to this, now fails to capture in that scenario, particularly if you've got multiple drones. Nor is it outlandish to think about this, because we see it in the news every day in Ukraine. We see the FPV drones and we see drone swarms being experimented with. But yeah, and obviously a lot of the tech is quite accessible. So if that kind of fixed radius old school scenario fails to capture some of these crucial factors, so from a modelling perspective, what kind of distortions can it create? And where do you see the biggest gaps between modelled exposures and realistic loss?
Yeah, sure. I guess the distortion kind of comes with, we looked at this originally because we were trying to compare a client's portfolio to its peers. And when you look at it at a 100% PML basis, that's quite difficult to do, especially if somebody assumes they're riding higher attachment points to their peers. When you're looking at a 100% view, that kind of gets taken out in the wash because it's basically every building is 100% hit and there's no sort of the lower losses are not being eked out. So looking at it in like a deterministic point of view, you're able to sort of differentiate between those 2 points. I think one of the major things that it misses is the building vulnerability. It's kind of, Niki mentioned, and you mentioned, like, what is the building made out of? Is it steel? Is it concrete? How tall is it? And the modeling companies have done a lot of work to kind of capture those factors, but there can be still much more to do. Like, just what it's made out of and how tall it is are 2 very small parts of what the building characteristics can be. And then that misses kind of another key aspect is it's not just a building itself, it's the surrounding. It's how tall are the buildings around it, how strong are they, is there tunneling effects, is there shielding, and that you shouldn't be treating one area the same as another. Like the New York cityscape is much different to Istanbul or London. And again, the models do take some assumptions around that, but obviously it has to be a simplistic way, because once we're dealing with large portfolios and we're trying to do analysis across millions of locations, computationally we're not there yet to use CFD models unless we focus on particular
It has to be
target.
widely applicable, yeah.
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 Yeah, and I guess lastly is, Niki's the expert in this, but it's, if we're doing 250 meter across the whole globe, we're kind of getting rid of the aspect of, is the risk the same in New York compared to London or compared to Sydney, which isn't the case. But I think it's just the simplicity of that is why it's become the standardized approach. But I think it misses quite key factors.
So the future work section in the paper highlights the importance of accurate geocoding. We've already touched on that. And you've already just mentioned the kind of building level data, and then eventually integrating, and you alluded to that too, fluid dynamics or AI derived blast footprints. So what practical steps can reinsurers take to prepare their portfolios for this next generation of modelling? Yeah, how can that perhaps unlock some capital efficiency as well?
Sure. Yeah, I mean, geocoding and location level data is not just for terror modeling. As we see it everywhere, from like NatCat to wind, earthquake. See, location is very important. But I guess for terror, it's more important than, say something like wind, because the difference of 10 meters can mean complete destruction or major damage, especially when you start looking at stuff like drones, which are going to specifically target an area of a building that might just main targets to bring that one building down. The geocoding becomes much more important. I think the issue we have is that a lot of the geocoders are built around address information rather than building centroid information. So the points often get aggregated to the entrance rather than the centroid. But ways to improve it is putting pressure on where you're getting the data from the direct insurers. Like, they might have it, they don't pass it on or don't realize it's not important enough. But then there's also ways you can license third parties to help improve your data through like different geocoding engines. Different geocoders perform better in different regions. And, with the advent of like AI, is obviously using AI alongside geocoders with supplementary information you already have to try and bring those points to the building location rather than the address.
And then how is all that going to help with capital efficiency?
The part that we're trying to model is basically what is the tail risk, like what is the worst scenario. And I guess that often, because the geocoding is so poor, I feel like they're often overstated, because we get false positives where locations are all accumulated to the same place. But that's not saying that geocoding will always lower your potential losses. It could happen the other way, depending on how much location information you're missing in the first place. So,
but more data is better, even if the figure could be higher in the end. It's better to have a more accurate figure.
Well, it is, but at the moment, you see the reinsurance market is the sole support here. I mean, so if you like, the capital provision is coming from the reinsurance market rather than necessarily from the capital itself. The market is borne out and wanting to retain as much margin as it possibly can, but is spending a lot of money on reinsurance. Reinsurance costs are probably as big a threat to a small terror portfolio as the losses themselves.
But lack of data, and therefore uncertainty, tends to add to price. I mean, in the forward to the report, that's the conservatism I think you were alluding to.
It is. I mean, the problem with the terror market on the insurance and reinsurance side, it is a highly commoditized pricing regime. So technical appreciation is one thing, but ultimately the market forces are changing this around. There's no particular reason why rates are going to come off at 1/126 in the way that they are, other than there's a lot more capacity in the market to do it. But if you narrow that and take that away from the opportunism of the reinsurance market in a sense, and put that against your own capital, you're backing a highly profitable line of business. And I think that ultimately, the problem that we've got is all the time we're basing our capital calculations on S&T metrics and not the rest. We're looking in the wrong spot. And I think that what George was saying in terms of getting more data, more granular data, in even the most fundamental way, will definitely be a step change. And I go back to 2005, 2006, when the energy markets post Katrina, Rita, Wilma has completely rethink the way they were keeping their data and plugging that into the insurance and reinsurance markets. So it's not outside of our wit to have the discipline to do that. I give you terror is a bigger challenge than it was back in 2005 in the energy markets. But it's that sort of mentality we really need to have to, I think, solve some of these problems.
I'll just add one extra bit. I mean, I think, that there is a lot that reinsurers can do today to prepare themselves for that sort of next generation modelling. And obviously, we've talked a lot about the geocoding and the building level detail. I'd just add to that as well that it's also understanding and knowing where the critical assets or critical systems, critical people sit within a site, because that gives a foundation for that modelling to be built upon and can really impact, if you're talking about something like the drone scenarios, those critical impact points or critical target points, it's good to understand, what that might mean ahead of something like that happening to kind of better protect, from a security risk management perspective, those critical nodes. And then I touched on it before, but that dynamic mindset of just, being flexible constantly to be reviewing this on an ongoing basis.
I mean, it's wonderful to have old assumptions questioned. Anything, I guess, but particularly terrorism. It's a market that defined by 9/11, but that's 25 years ago now. So obviously intellectual rigor, there's plenty of that in the room. It's great to see. Sometimes, certainly within the PV space, I think there's more time and energy goes into thinking about some other risks within the book, like SRCC. It's good to return to terrorism and just how much the risk landscape's moved on. Was that the rationale for the focus of this report?
Yeah, it was. I mean, we were thinking that actually there's more to say in other areas, but this seemed like a very good starting point. And just because terror is a very high margin portfolio of business, and I think it's got many more opportunities. And we haven't even talked about aggregating exposures across the corporate insurers, when they're taking terror exposures on in their property books and their fine art books and their workers' comp books, and almost the numbers coming out of that are so scary, people don't seem to want to try and tackle them from a reinsurance standpoint because there's not enough capacity behind it. So there's a lot going on in that terror space. But also, I mean, we'll probably start turning our attention to things like SRCC and PV, and there's some of the more new developing areas of active assailant and thinking about terror liability, which are areas which are really interesting the insurers at this point in time.
That was a really fascinating conversation. Just thank you very much, guys. Appreciate all of you, George, Paul, Niki. Thank you very much.
Thank you.
Thank
Thank
you.
you for having us.
And that concludes this special episode of the Political Risk Podcast, produced in association with Lockton Re. I will include a link alongside this episode to download the Beyond the Blast report. And I'd like to thank my 3 expert guests for this episode: Paul Upton and George Wragg from Lockton Re, and Niki Whitley from Blackthorn. Until next time, thanks for listening and please tune in again. I've been your host, David Benyon. Production was by Peter McGill, and Lawrence Durkin made the music.